Welcome to the deep dive. We're taking a deep dive today into Arman Financial Services. We got their investor call transcript right here. You're trying to figure out Q2 performance. So think of this as your quick guide to everything Arman, like revenue, expenses, and how they're dealing with everything happening in microfinance.
And it's a pretty turbulent time for microfinance right now. So yeah, we'll get into the specifics about how Arman's doing, but it's really important to understand what's going on with things like over-leveraging and regulations that are affecting the whole sector.
Definitely. They talk about a substantial rise in what they call impairment costs across the entire industry in this transcript, which basically means more loans are going bad. Arman thinks a big part of this is over-leveraging. Borrowers are taking on more debt than they can actually handle. What's interesting is that even Arman, who's known for being conservative, seems to be a little bit surprised by how bad it is.
Yeah, it's like they knew there was a storm coming but didn't realize it would be a hurricane. It kind of makes you wonder if they're really assessing risk properly in this crazy market. And then you've got high staff turnover in the industry, which makes it even harder to collect on these loans.
So you've got loans going bad, and it's harder to collect on the good ones. How is Arman responding to this?
Well, they're being cautious and consolidating. They've stopped focusing on growing so much. Instead, they're shoring up their existing loans and making collections the priority. Kind of a batten down the hatches strategy. Stability over risky expansion in a turbulent market.
Makes sense. They've been around for over 30 years, so they've probably seen this before. Let's get into the numbers, though. They say consolidated profit dropped 63% year-on-year for the quarter.
Yeah.
Yikes. I'm guessing that's mostly because of these impairment costs.
Yeah, they're a big factor for sure, but their pre-provisioning operating profit, meaning before factoring in loan losses, actually went up. So operationally, they're doing okay and keeping costs under control, even though the market's tough.
So their core business is healthy, but these external factors, these industry problems, are hurting their profits. Did they give any detail on their revenue?
Yeah, and this is where it gets interesting. Even with all the challenges, Arman's gross total income actually grew 13% year on year. They hit Rs 182 crores.
Wait, so their profits are down, but their revenue is up. What's going on there? Let's look closer at their business segments to see what's driving that revenue growth.
Good point. Their standalone business, which includes MSME loans, financing for two-wheelers, and their new loan against property business has been doing very well. Their assets under management there jumped to Rs 483 crores. That's a 35% increase year on year.
35% growth in this economy. That's impressive. They must be doing something right. Are they still actively giving out loans in this environment?
In their standalone business, absolutely. Their disbursements in the first half of the year reached Rs 206 crores. That's a 35% jump year on year. And just in Q2, they disbursed Rs 104 crores.
So, not afraid to lend money, at least not in their standalone business. Seems like that segment is a big reason their revenue is growing. What about their microfinance business, the one they run through Namra Finance? Are they being careful there or still lending a lot?
It's a bit more complicated there. Namra Finance has Rs 1,981 crores in assets under management. In the first half of the year, they disbursed Rs 625 crores. Just in Q2, they disbursed Rs 269 crores.
So they're still giving out loans in microfinance despite all the problems we discussed. How's that working out for their revenue and profitability?
They're still seeing revenue growth, but not as much as their standalone business. Namra Finance made a gross total income off Rs 138 crores for the quarter. That's 9% more than last year. For the first half of the year, they're at Rs 281 crores, a 14% increase year on year.
So revenue is okay, but I have a feeling profits are a different story. You mentioned consolidated profit dropped a lot. Let's break down each segment to understand what's happening.
You're right. The profit picture is really different for each segment. Their standalone business had a profit after tax of Rs 8 crores for the quarter. That's 11% lower than last year. But looking at the first half of the year, they actually had 21% year-on-year profit after tax growth, reaching Rs 21 crores.
Okay, so they're staying profitable in their standalone business, even with the economy being like this. Seems like their operations are strong, and they're focusing on segments that aren't as affected by the issues in microfinance. How about Namra Finance, though? I have a feeling those high impairment costs are hurting them.
You're right on the money there. Namra Finance's profit after tax for the quarter dropped to just Rs 6 crores. That's a huge 81% drop year on year. For the first half of the year, the decline was 61% year on year, with the profit after tax of Rs 25 crores.
Wow, that's a massive hit. The microfinance segment is really struggling. It seems like their decision to keep lending aggressively in that environment might be making things worse.
Yeah, it definitely looks that way. The impairment costs are clearly a big problem for them. Makes you wonder if their current strategy for microfinance is sustainable.
It's a strange situation, isn't it? Their standalone business is doing well and making money, but their microfinance arm is in trouble. Like they're playing two different games with different rules.
Exactly. And investors need to understand this when they're looking at Arman. It's not a simple buy or sell situation. It's more complex than that. You need to understand their operations, how much risk they're willing to take, and what their long-term goals are.
I'm curious about their expenses. Besides the impairment costs, did they mention anything else that's contributing to this profit drop? Are there operational challenges we should know about?
They keep saying they're committed to being efficient and controlling costs, but the transcript doesn't really give details about expenses besides impairment.
That's too bad. Would be nice to have more detail to see why their profit dropped so much.
Yeah.
Guess that's part of the challenge, though. We have to work with what we have and figure out the full story.
Yeah, exactly. Like, we're detectives looking for clues and trying to connect the dots. That's what makes these deep dives interesting. It's not just about the numbers themselves, it's about the story behind them and what's really happening with Arman. Yeah, it really is. We have a pretty good idea about their financials, but what about some of the other key metrics to help us see how they're actually performing? Things like, their growth rates, what their market share is like, customer metrics, and a closer look at how their segments in different regions are doing.
Yeah, that's what I was hoping we could dig into. But this transcript doesn't have much detail on that. It would be really helpful to see how they compare to their competitors, and how different regions are performing.
Right, I agree. Those data points would give us more context. We could see where they stand competitively and maybe spot some strengths or weaknesses. For example, are they actually gaining market share with their standalone business, or is the growth just because the whole market's doing well?
And geographically, I wonder if they're mostly in areas that are being hit hard by this downturn. Or are they diversified enough to handle that kind of regional risk?
Yeah.
These are the kind of questions that would help us understand the bigger picture.
Exactly. It's like trying to navigate without a complete map. We see the general area, but not the specifics.
Speaking of planning, what about their outlook for the future? Did they give any guidance or talk about their plans? Are they just hunkering down, waiting for things to get better? Or are they looking for growth opportunities?
The transcript doesn't have specific numbers for the coming quarters, but they do seem cautiously optimistic about the industry in the long run. They say it'll take some time for a full recovery, though.
So they're not making big promises, but they believe in the market. What about their strategy? Are they sticking with what they're doing or making changes with all these problems happening?
It seems like they're doing a few things. For their standalone business, they're still looking for growth, especially where they see potential. Their MSME segment is really interesting. Their yields are much higher than what other lenders usually get.
Yeah, that's what really stands out to me. Makes you wonder why customers are willing to pay more for Arman's MSME loans.
Yeah.
Better service, a niche market, or maybe they're taking on more risk to get those higher rates.
It's a good question, and the transcript gives some clues. Arman says the higher yields are because of a few things. Operating costs are higher, especially for their doorstep collection model, and they say they're faster and more convenient than other lenders for MSME clients.
So basically they're saying they provide a better service that's worth the extra cost. It's like a premium service for loans. Personalized, convenient, but you pay more.
Yeah, exactly. But is that really sustainable, especially now that regulators are looking at high interest rates? Remember, the RBI is going after some lenders for predatory lending practices. Could Arman be next?
That's a good point. Arman seems to think they're fine, but the RBI is really focused on protecting consumers and responsible lending. It's definitely something investors need to think about.
Absolutely. It shows how important it is to not just look at a company's financials, but to also understand the regulations and how they could affect things.
It's a reminder that even a well-managed company can be vulnerable to external factors. Are there other risks Arman is facing? We talked about the regulations and the microfinance problems, but anything else investors should know about?
Well, one concern is that the microfinance industry as a whole could keep getting worse. If over-leveraging and defaults increase, even if Arman is being conservative with their microfinance subsidiary, they might not be able to escape the effects.
Like trying to outrun a tsunami. You might be a strong swimmer, but the wave is just too powerful.
Exactly. So you have to understand how exposed the company is to these industry-wide risks. Are they too focused on certain regions or types of customers that are more vulnerable? How diverse is their loan portfolio? Investors need to consider these things.
It's about understanding how they manage risk and how well prepared they are for a longer downturn in microfinance. And speaking of positioning, how does Arman compare to his competitors? Are they leading or falling behind?
That's where this transcript is lacking. It doesn't give any comparisons or even mention specific competitors. To really see where they stand, we'd need to look at data from other companies, compare things like loan growth, profitability, and asset quality.
Like trying to judge a race without knowing how fast the other runners are, we need that data to see who's winning. Based on what we do have, what are your first impressions of how Arman is doing compared to the competition?
They're definitely a major player in Indian financial services, long history, and a varied portfolio. Their standalone business, particularly their focus on MSMEs, looks good, but their involvement in microfinance through Namra Finance is a bit worrying.
So it's a mixed bag, some good, some bad. It's a classic case study, a company dealing with a complicated and changing market, trying to grow while also managing big risks.
Yeah, exactly. And that's what makes it so interesting. There's no easy answer. You need a deep understanding of the industry, the company itself, and the broader economic factors.
So we've talked about their financials, their strategies, and the risks. If you had to summarize Arman right now, what are the key takeaways for investors?
Arman Financial Services is at a crossroads. Their standalone business, especially the MSME part, is showing potential for growth and resilience. But their microfinance arm, Namra Finance, is having a tough time because of problems in the industry and maybe their own lending practices.
They're in two different worlds. One is growth and opportunity. The other is risk and uncertainty, like walking a tightrope, trying to balance while everything changes around them.
And the big question for investors is, are they flexible and smart enough to handle this?
Do they have what it takes to not just survive, but actually thrive in this environment? Only time will tell. But for investors looking for a company with a good track record, diverse offerings, and a willingness to take risks, Arman is worth a closer look.
I agree. It's not a sure thing, but it's an interesting case study for anyone who's interested in Indian financial services and what's happening with microfinance.
And that's what makes this deep dive so useful. We're not giving answers or investment advice. We're giving you the information and insights you need to decide for yourself, based on how much risk you're comfortable with and your goals.
It's about empowering you to make your own financial decisions, to understand what's behind the numbers and make choices that work for you.
Speaking of understanding, there's something about Arman's strategy that I keep thinking about. Those high yields in their MSME segment, they look good, but I'm not sure about them.
You're right to be careful. They explain why the yields are high, but it's important to look deeper and understand the risks. Are they charging too much interest? Are they focused on MSMEs that are vulnerable to economic problems? We need more information.
It's like they're playing with fire. It might work for now, but with the RBI watching lenders so closely, could this aggressive approach hurt them later?
It's definitely a gamble. We'll have to wait and see if it pays off. But it's something to watch as we see what happens with Arman.
It's like a suspenseful financial story. Will their risky strategy make them successful or lead to their downfall? We'll have to see.
And that's what's so great about investing. It's always changing, full of surprises. It's exciting.
It's about accepting the unknown, dealing with uncertainty, and always looking for new information so you understand the market and the companies you're thinking about investing in.
It's about constantly learning, asking questions, and not just believing everything you hear. And with that, I think we've done a good job unpacking Arman Financial Services.
We've looked at their financials, their strategies, and the good and bad things they're facing.
Now it's up to you, the listener, to decide. Is Arman a company you want to invest in? Are their strengths stronger than their weaknesses? Do you believe in their plan for the future?
These are questions only you can answer. We hope this deep dive has given you the information and knowledge you need to make a good decision.
Remember, the process of investing is just as important as the outcome. Enjoy it, stay curious, and never stop learning.
Thanks for joining us for this deep dive into Arman Financial Services. Until next time, keep exploring, keep asking questions, and keep digging into the world of finance.
It's been really interesting looking at Arman's financials and their strategy.
Yeah, we've definitely learned a lot about how they're performing, how they approach different parts of the market, and what they think the future holds. But like a good mystery, the more we learn, the more questions we have.
Exactly. It really shows you can't just rely on an investor call transcript. It's a good place to start, but there's always more to the story, missing pieces that need more investigation.
It's like we got a peek into their world, but to really understand it, we need to go deeper.
Like when we talked about those higher yields in their MSME segment, and how risky that might be. We don't have enough information about their loans, their criteria for giving loans, or who their customers are to really know how much risk they're taking.
I'm especially curious about their customers. Are they lending to MSMEs that already have a lot of debt? Are they operating in areas that are struggling economically? These things could really impact how they perform in the future. It's hard to get the full picture without that information.
Exactly. That's where you have to do your own homework. This deep dive has given you a good foundation, but you need to go further and do your own research.
It's like we gave you a map and pointed you in the right direction. Now it's up to you to explore and see what's out there.
You might need to look at industry reports, data from their competitors, maybe even talk to analysts or experts who follow Arman. The more information you have, the better.
You become a detective, a financial detective, gathering clues and building a case on Arman Financial Services.
And remember, the best part of investing is that there's always something new to learn. Every company, every industry has its own story, its own things that make it succeed or fail.
It's an ongoing journey of discovering new information, challenging what you think you know, and improving your understanding of the market.
It's about being a student, always asking questions, and not taking things at face value. And with that, I think we've unpacked Arman Financial Services pretty well.
We've looked at their good and bad points, the chances they have and the dangers they face, and given you the tools to investigate for yourself.
Now it's up to you to decide. Is Arman a company you believe in? Do their strengths outweigh their weaknesses? What do you think their future holds?
Those are questions only you can answer, but we hope this deep dive has helped you along the way.
Remember, the process of investing matters just as much as the result. Stay curious and keep learning.
Thanks for joining us on this journey into Arman Financial Services. Until next time, keep exploring, keep asking questions, and keep diving deep into the world of finance.